I'm Sarah, a tutor at Accountancy Learning, and in this video I'm going to take you through the Tax Processes for Business AAT Sample Paper 1 Task 5. This task is about verifying VAT returns. The first question that we have in this task then is identify whether the following statements about transactions outside the UK are true or false. So the first statement that we have is box 1 of the VAT return does not include exported goods as they are 0 rated. So box 1 is the total output VAT. So because exported goods are 0 rated, effectively they're not included because the VAT would be 0. So it isn't going to affect the total of box 1. So therefore that answer will be true. Box 4 of the VAT return includes VAT reclaimed on imported goods which have been accounted for using postponed accounting. So box 4 is your total input tax. So because we're going to be importing goods, that means there's going to be an element of input tax. So we're going to have to include it. So regardless that it's on postponed accounting, we still need to include it in our box 4. So that one is also true. Then our last statement here, box 6 of the VAT return does not include exported goods as they are 0 rated. So your box 6 is actually your total sales. So we have to include the exported goods because it's going to be the total sales figure that matters for box 6, not the VAT figure. You're looking at the sales figure for box 6. So that answer would be false. Moving on through the task then, we're now given a lot more information. We're given Brilby Limited has recently changed accounting software to calculate the VAT due to or from HMRC. They don't use any special schemes, and the finance assistant has completed the draft VAT return for the quarter ending the 30th of June 2023. The accountant has asked him to complete a reconciliation to the trial balance to confirm the accuracy of the figures before the return is submitted. So here we have our draft VAT return, and here we have the VAT liability in the trial balance. We're also told that the trial balance includes closing trade receivables totaling 62,400, all inclusive of VAT, and closing trade payables totaling 5,160, again inclusive of VAT, and they're all from the month of June. And there's no opening trade receivables or trade payables. Now, just as a point of information here, it does tell you here that in the exam, this information can be viewed in the references section. So on the right-hand side, you can also pick out the information. So you can have your question information on one side of the screen and the answer on the other side of the screen so that you don't have to keep scrolling up and down. So our question then is to identify the reason for the difference between the VAT due in the VAT return and the figure on the trial balance. So we're going to have to use all the information in the question in order to work out what's happened. So in the TB, in the trial balance, we have output tax of 26,800. And we have input tax and three, two, 40, finding the figure. And in the VAT return, you've got output tax of 16,400 and input tax 2,380. So when we calculate what the differences are between the draft VAT return and the figure on the trial balance, we get that there's a difference of 10,400 for output tax and 860 for the input tax. Now, the information that we're given here is not irrelevant. So for this trade receivables balance, that's our gross figure. So if we work out what the VAT would be, and remember you can divide by 120 and times by 20, or you can divide by 1.2 and times by 0.2 to work out VAT from a gross amount, just depends whether you prefer decimals or not. When you work out the VAT on that, you end up with 10,400 VAT. And the same here for your trade payables figure. When you work out the VAT on that, you end up with £860 VAT. Now, these are the same as the differences that we've just calculated here. So that tells us that the credit customers and the credit suppliers hasn't been taken into account. So in the VAT return has only been based on when cash has been paid and received. So therefore, the difference has been caused by the software being incorrectly set up for cash accounting. The second part of this question is to complete the table below to reconcile the figure in the draft VAT return to the figure in the trial balance. Use minus signs to indicate negative figures where appropriate. So this is going to be important to us. So we have to then have a look now at our figures. So the first one we need to populate is the amount due per draft VAT return. So the amount due is going to be our box 5, 14,020. So we can put our VAT return figure in there. Now we know what our differences are because we have proved it in the first part of the question here. So these are our two differences. So in the exam, you've got drop downs here, which you can choose from, and these are the options that you're given. So we need to deal with our trade receivables here. So that's going to be our output VAT on aged receivables. So remember, output is always related to receivables, input is always related to payables. So it'll be output VAT on aged receivables. So we're going to need to add that on because remember, this is the amount that's due to HMRC. So our output VAT is only going to increase that. So we're going to add that on. So we don't want that to be a negative. Then in the same way, we now need to deal with our trade payables. So we've got our figure of 860. So payables is input. So it needs to be input VAT on aged payables, which is 860. But our input VAT is going to reduce what is due. So therefore, we need to put a minus in there as well. So when you then add these two together, take off your 860, you get 23,560, which when we look back up here, that matches our VAT liability in our trial balance. Then the final part of this task then is to identify the two correct actions that the finance assistant should take. And we're given quite a few options here. So we're going to be looking for two actions. So the first one then, correct the VAT return next quarter. Well, it's only in draft stage at the moment, so it should be corrected now. So that would not be an option. The second one is submit the draft VAT return without any changes. Well, we've identified the error, so we should deal with it before submission. Next one, carry out the corrections by making changes to the accounting software and submit the return. That sounds reasonable. So yes, you should make the changes to the software. But before we submit the return, we should check it first. The next one, carry out the corrections by making changes to the accounting software. So yeah, we need to carry out those corrections. We need to change the accounting software so it doesn't happen again. It's not repeated. The next one, ask the accountant to confirm the changes before the return is submitted. So we said it wasn't this one because we're not just going to submit the return, but we do need to make sure that it is confirmed, it has been verified before we submit it. So we're going to want to ask the accountant to do that. Now we've identified our two correct actions, but just to cover off this last one here, report the corrections to HMRC. It's only errors over 10,000, but after submission. Because at the moment, HMRC isn't aware of it because it's a draft VAT return. So we don't need to report it to HMRC because we haven't submitted it to them. And that is then the end of task 5.